Now, I've been talking about recently more than ever, probably with the turmoil, the volatility in the market, that it's a great time to do some spring cleaning or some rethinking, some consideration about some of the positions in our long-term portfolios. Now, whenever I think about this, I always come back to one ETF, one of my favorite ETFs across the entire market as a dividend growth investor, and I'm talking about the Schwab US Dividend Equity ETF. This ETF offers stability, some defensive qualities, it's tax efficient, it's cheap to hold on to, it's grown like crazy over time, and it's paid more and more in dividends year after year. Now, especially more than ever, if you want to build out a defensive portfolio, you're going to want to stick around until the end of this video because we're going to dig deep into why SCHD could be the perfect ETF for tough times like we've been seeing so far this year, and maybe more tough times ahead. So if this interests you at all, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So today's article comes from seekingalpha.com from Jonathan Weber. Shout out to them. It says SCHD great dividend growth, excellent for tough times. Let's read on. It says the Schwab US Dividend Equity ETF offers a reliable dividend yield, strong sector diversification, and below average volatility, making it attractive for uncertain times. SCHD has delivered a 10% total return over the past 9 months, outperforming the S&P's 3% return. This ETF's dividend growth has been consistent with double-digit increases over the last decade, suggesting a potential annual return of 15%. With low exposure to volatile tech stocks, which again, as of right now, are not fun to be exposed to, historically though they are. And a focus on recession-resilient sectors, SCHD is well suited for navigating the market uncertainties. First off, it says, despite uncertain times, dividends are growing. Investors have different goals. For many, income is a key goal. For me personally, it is. This includes retirees and other investors who live off their dividends, but even among those who are not yet living off their portfolio cash flow, there are many investors who like the income investing approach. I belong to that group of investors. This is due to the fact that dividends can be a significant total return driver, while receiving a reliable cash flow of income from our portfolio can also help us stomach harsh times more easily. Selling following or during a market crash can be a huge psychologically caused error, and a nice income stream helps us avoid it, as we will want to hold on to our dividend-paying stocks even through tough times. Now, income investments can especially be attractive when they manage to grow their dividends over time. For single stocks, that is a pretty straightforward thing. When a company raises its dividend, our dividend stream will grow even if we do not buy additional shares. When it comes to an ETF like SCHD, things are a bit more complicated, as some of the companies will increase their dividends in a specific time frame, while other portfolio companies won't. Some may even reduce their dividends. Also, SCHD's management is buying and selling stocks from time to time, so the portfolio is not constant. It changes over time. Add the fact that some companies do not pay quarterly, but monthly, annually, or semi-annually, with special dividends on top of that in some cases. And the portfolio cash flow that SCHD generates can vary a bit from quarter to quarter, which translates into some minor ups and downs in the dividend over time. But when we look at a longer time frame, things are looking great for SCHD. And I've talked about this as of recently. We're talking 16%, 11%, almost 12% dividend growth over basically every single time frame. In the above table from Seeking Alpha, we see the Schwab US Dividend Equity ETF. Dividend grade is an excellent at an A+. When we delve into the details, things also look great, with this ETF showing double-digit dividend growth over every single time frame. Despite the fact that dividends can decline on a quarter-to-quarter basis, from time to time, the dividend growth rate over the last year was significantly higher than the longer-term average, which naturally looks good. This may be a sign of dividend growth accelerating going forward, but it's not guaranteed. The good news is that even if the dividend growth were to decline back to the 11% range it has stood over the last decade, that would still be highly attractive. I mean, heck, you guys tell me, wouldn't even a 7% or 8%, 9% dividend growth rate be pretty good? Not to mention SCHD's current share price, where it's at as of right now as I film this video, we're talking almost a 4% yield more or less starting. The combination of a solid starting yield and strong dividend growth also result in massive income being generated down the road, as the following scenarios show. If SCHD grows its dividend 11% per year for 5 years, with a starting yield of 3.7% and all dividends being reinvested over those 5 years, the yield on cost from someone buying today would be 7.5% 5 years from now. If SCHD grows its dividend by 11% per year for the next 10 years with a 3.7% starting dividend yield, And with dividends being reinvested along the way, the yield on cost would jump to a hefty 15%. There is, of course, no guarantee that this ETF will maintain its dividend growth though, but the consistency of dividend growth rate over the last 3, 5, and 10 years suggests that it has a chance to at least keep happening. But even if the dividend growth were to average, let's say 7.3% per year over the next decade, 2/3 of the historical 11% average that is, then the yield on cost for someone buying it today would still be 11% a decade from now. Guys, 11% yield on an ETF that continuously has grown historically, I mean, sign me up. SCHD continues to have a strong dividend growth track record, with dividend growth even accelerating in the past years, despite a wide range of macro troubles, including military conflicts, trade tensions, growth worries in major economies such as China and Europe, and so on. They then go on to say that this is the right ETF for uncertain times, with tariff tensions between the US and many other economies being high. The market has been volatile in recent weeks. You could say that again. I believe due to the uncertainties around trade, economic growth, inflation, interest rate movements, and so on. During these times, SCHD ETF could be a good choice. Not only does it offer steadily growing income, but it also is not very volatile. Its beta stands at 0.83, suggesting that it will move less compared to the broad market during sell-offs or market downturns. And we've seen this over the past couple weeks definitely be true. Now lastly, is SCHD an attractive investment? The Schwab US Dividend Equity ETF holds large, high quality, and I would say relatively low risk companies such as AbbVie, such as Coca-Cola, Texas Instruments, BlackRock. Its approach of finding the best values in its investment universe has allowed for compelling results in the past, both when it comes to growing its dividend reliably and quickly over time, as well as it comes to generating total returns. Those stand at 13% per year since inception, with an expense ratio of 0.06% and strong liquidity. 15 million shares are traded per day. SCHD ETF's data looks quite good as well. With its sector diversification, its exposure to non-cyclical, recession-resilient businesses, its below average volatility, and its reliable and growing dividend stream, SCHD is an appealing investment overall, but it could be especially valuable during tough times. While it's possible that equity markets recover quickly from the recent sell-off, it is also possible the waters will remain choppy due to a wide range of macro uncertainties and troubles, and SCHD could be a good pick for such scenario, I believe. So once again, shout out to Jonathan Weber. I totally agree with this article. There's a ton of opportunity, in my opinion, by holding on to and dollar cost averaging into more shares of SCHD in 2025, which is exactly what I'm going to be doing. I mean, either way, even if SCHD doesn't go down in price, even if it goes up in price, I'm going to keep buying more and more shares just because I personally have a long time horizon ahead of me for investing. But regardless, I want you guys to comment down below if you agree that this ETF could be the perfect ETF pick, especially during turbulent times like we're seeing in 2025 so far. And if not, what are some ETFs you're watching closely? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.